Hello traders and welcome to another video review. Today is Tuesday, the last day of the February 2023, the month's end. So let's better check out what is going on the Forex calendar today. What do we have here? As you can see, not too much. Nevertheless, there's always something for someone. Data released from the Australia in form of the retail sales beats the expectations. 1.9% is the retail sales number for the period of the January, while the previous reading was minus 3.9% and the forecast was 1.5. So nice data from Australia. The Australian technical analysis is available still. That was yesterday. We made it yesterday just before the retail sales data hit the wire. So during the New York session, we got two very important events scheduled for release. GDP from Canada, 0.1% from the month of December. Well, as you can see, not really good data here from the Canada. And then we got CB consumer confidence data scheduled for release at 4 o'clock. This data are of course from the US, and the consumer confidence supposed to increase in the month of the February from 107.1 to 108.5. So let's see whether the Americans will be so confident in their consumer choices. So only free data for the last day of the February 2023. Nevertheless, we're supposed to find out what is going on the charts anyway, and I guess we are going to start as usual from the euro dollar. For our chart of the euro dollar, didn't change much. Nevertheless, I would like to point out something characteristic for this market. As you remember, we've been following the ending diagonal pattern, or as you can say, the wedge pattern, falling wedge pattern. All of the names are correct. Nevertheless, we abandoned this pattern because the market broke below this level here, the level of the 1.0578, which was the low of the wedge. So we have a first hit, we have the second hit, and now we have the breakout. We made a low at the level of 1.0535. We are below the lower wedge line, and then surprisingly we have a rebound to the upside, and the rebound is back inside the wedge now, and it's testing what? This technical resistance, the technical resistance at 1.0613. It was rejected once, rejected twice, rejected 3 times already. Let me just zoom in for you guys to take a look at this. So I guess that if there is no rejection, if there is no continuation to the upside towards 50 or 100 moving average, this rejection is apparently correct, and we should expect another move to the downside. Nevertheless, if we break above this line here, this orange line, because we have of course top, first hit, second hit, and the third hit. So if we still be trying to break to the upside, and if eventually this movement will be made, and the daily this is for our chart candle will close above, and ideally daily time frame chart candle will close above this level here, the blue line. That means the wedge is done. We might have some overshoot to the downside here, or undershoot to the downside towards 1.0535. Nevertheless, our assumption was correct. It wasn't brilliant, it wasn't like a textbook example. Nevertheless, any breakout higher towards 50 and 100 moving average means that we are reversing from the moving average as expected. So what we should be right now expecting is a movement up here if we break above this level. Okay, so that's the situation on the euro dollar. So let's find out how the Aussie reacted to the data again, and it looks like it didn't actually reacted very well. So what do we have here? Well, let me just zoom out again. We have a continuous downtrend, high, lower high, lower high, lower high, lower high, and now it's clearly lower high, lower low, lower low, lower low. definition of the downtrend on a 4-hour chart. Let's just zoom in. What do we have here? We are still below 50, below 100 periods moving average. We are moving lower and lower. We are approaching the yesterday low, 6,701. The intraday technical resistance might be the Marubozu high, but we will make it a little bit updated, 6,753. Okay, so that's the very narrow zone. Momentum negative, tried to bounce from the extremely oversold market conditions, went towards 40, and it's pointing to the downside. Not good, because that means that the market is being controlled by the bears. I mean, it's good for the bears, of course, but it looks like the bulls don't stand a chance for now. Next target 6,689, and of course we will put one more target here, the lows from the 20 December of 2022, 6,632, and that's the overview of the Australian dollar. So if this situation is continuing, all right, on the Australian dollar, the situation is the downtrend. What is going on the US dollar index then? Well, US dollar index keeps moving above the 50 periods moving average, and that's a very good sign for bulls. Of course, we got this kind of a Marubozu candle here, as you can see. Nevertheless, it didn't actually made any sort of the new, let's say, high, because the last high was made 105 and 33. Momentum is positive, not that strong. It was positive, hit the extremely overbought market conditions at 105.33 and then went down. As you can see, immediately the market dropped towards the level of 50, the neutral level. So let me just point it out. This is the level of, let's say, this is the level of 50, but it's still positive. We are testing the level of 50. We are trying to bounce. As long as we trade above the 50 and 100 periods moving average, the outlook remains bullish. Next target is, of course, the level of 105.60. So it's only, let's say, roughly 30 pips away. We are only 30 pips away from this target. And breakout above the highs from, this is the beginning of the January 2023, would extend the up move even higher. So very nice confirmation from the US dollar index that the basket of the US currencies is trending higher on the 4-hour time frame chart. So it's not all about the weakness of the other currencies. Is the dollar getting stronger? So if the dollar getting stronger, Australian dollar is going down, Euro dollar is going down, what then is the gold doing? And the gold is moving lower, and this is in line with the expectations. US dollar is going up, dollar is going down, as you can see here. Very nice signal here, right? And then we are still trading below the 50 periods moving average, and of course below the 100 periods moving average. What is the next technical support? Well, it's hard to say because all of them were recently violated, but the historical one, I guess, might be this one, which is being tested right now. Let me make it even green and nice and thick one so everyone can see. We are now testing this level, 1,807, and in case of a further breakdown to the downside, we still have this level here, which is around 1,784, the blue line. Okay, so now momentum is negative with the occasional bounces on the gold, but definitely this is a definition of the local downtrend extending just below the yesterday's low at 1,806 right now. Okay, so let's just take a look at the weekly or even monthly chart. As you can see, the monthly looks very encouraging for bears. Why? Because as you can see on the weekly time frame chart, we can see, let me just zoom in maybe, we can see this bearish engulfing pattern. Look at this big bearish engulfing pattern. Pin bar on the top around 2000, again pin bar around the top, 2069 the high, pin bar, another pin bar. Now we hit the level of 1,948 one month, the next month 1,959, reversal, bearish engulfing pattern. So it looks like when finally we will leave this area, we might find ourselves even below 1614. This is the low of the 2022. Very interesting situation on the monthly time frame chart. I encourage you to do your own research and take a look at the monthly candles, because today is the last day of the month of the February, so plenty of the interesting things from the technical point of view might be found there. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye bye.